Hello everybody and welcome to another video of DIY investing. In our last video we talked about why we got confirmation that the bottom was in after our recent breakout that we saw. Now that we have confirmation, we're going to be taking a look at every single one of our bear market bottoms, analyzing the first breakout and talking about where the price is most likely headed in the short term and how we can go about profiting off of it as this move takes place. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. So what we're going to be talking about today is every single one of the breakouts that started our new bull trends. We're going to be taking a look at this, but before we get into that, I wanted to go through and give you guys a little market update. We're going to take a couple minutes and just going through some of the other markets as a whole. Now, first things first, what I wanted to talk to you guys about is an update around the S&P 500, the Dow Jones, and the US dollar. Now, as it stands, we've been watching this chart for a long time. We've basically made lower lows and lower highs. Every time we've hit this descending resistance, we've rejected and made a new low. Now, most recently, after we tagged this again, we actually were able to hold support, and now we're making another attempt at a breakout. We don't have confirmation yet, but this is a very encouraging sign for the bulls. What I would love to see here is a move a little bit higher. Maybe we rally upwards of our top of our resistance at about 4,100. And then from there, if we can get a retest of this as support, that's going to set us in for another move higher and really just the confirmation that we need that the bear market is over. What we were originally looking at, and really what the leading indicator was telling us that the bottom was in, was actually the Dow Jones. The Dow Jones was following the SPX. Every single time we hit this resistance, we fell lower until this point here where the Dow Jones actually broke out of its downtrend, retested that downtrend as support, and now we're actually getting continuation from that point. Now, the big thing that I would like to see here from the Dow Jones, I would absolutely love to see a move upwards of about 35,500, a retest of our previous high as support, and then that's most likely going to set us up for another move to all-time highs and potentially into new all-time highs. That's pretty much what we're watching out for based off of these two charts, and everything is going to be decided around the DXY. The US dollar index is sitting at a major support level, or a perceived major support level, because keep in mind, guys, it is very possible that this support box could actually turn into resistance, and if that happens, that's where we would ultimately expect to see the SPX continue to break out, the Dow Jones continue to break out, and ultimately this to continue on lower. And so kind of what I'm watching, and this has kind of been my entry box that I've been watching for a while, inside of this move right here, I was expecting that we would find some sort of support. And so now we've actually fallen all the way back down to the very low end of this entry box. And so now that we're sitting here, we really need to be paying attention for the potentiality of a bounce coming in the dollar. And if that happens, we would ultimately expect that the stock market and the cryptos would actually pull back a little bit. So it's nothing unheard of. Bitcoin's made a massive move after this breakout. The SPX is at resistance, and the Dow Jones is pretty much sitting right at its range highs. And so now with this, ultimately we're going to be deciding what's going to be taking place throughout this chart. If we get a bounce back up and, we ultimately rally upwards of about 105, I wouldn't be surprised to see this come back down, this turn back into resistance, and if that takes place, we would be looking at a pretty sizable drop back to the downside. And so that's kind of the way I'm personally going to be playing this range. But here's the thing, guys, if we manage to get a bounce, we hold support above this 103 level, we could be looking at a much higher move back upwards of about 107 to 108. No matter what, the way that I'm personally looking at any of these bounces, potential bounces inside of this chart, is going to be much more along the lines of when we topped here in 2020. We sold off, we bounced, we made a lower high, and then we actually continued on inside of this bearish trend. Now that we've talked about all of this, what to be watching out for in the short term based off of the other markets, let's actually get into what the whole point of this video was, analyzing the breakout points, how every single one of the beginning of our new bull runs have started in years past, and let's basically just go through and talk a little bit about this. Now, the way that some of this is going to work, we're going to go and compare through Fibonacci, because this is going to give you guys an idea of how big the bounce actually was. And so if we come back here and we take a look at our very first breakout, we can see that this one didn't even quite hit the 236, and this was actually the smallest breakout that we ever saw heading into a new bull trend. If we come fast forward back over to here, we can see that this one was a little bit bigger, but it was still relatively small. I mean, we peaked in between the 236 and then the 382. And so if we come all the way over here, we come to the 2018 to 2019 bull trend, we can see that this one was our biggest by far. This one extended all the way up to this 618 region. And so we have three different cycles that we can compare and contrast opinions. What could potentially happen heading into this beginning bull trend? Because here's the thing, guys. I do believe that we've got confirmation that the bear market is over when we also flashed that the bear market low was in based off of the 4-year cycles, and now we're seeing such a massive breakout off of those range lows. That told me that the confirmation was in, the bottom's in. What I told you guys is basically if we don't see a lower low or any sort of big sell-off from January the 8th to the 15th of this month, then the bottom's going to be in and I'm going to be playing the market as follows. And from that point, we've only ever seen the market breaking out. Now, I'm not saying that we can't pull back right here, but here's the thing, the bottom is in, so we should be looking at any pullbacks as an opportunity to scale into either new positions or old positions to basically compound those old positions heading into this next cycle. Now, first things first, let's draw the Fibonacci and let's give us an idea here of what we could potentially see. We're going to drop this to a daily time frame and we're going to take every single one of these early cycles and we're just going to overlay them to give you guys an idea of what it kind of looked like once we began that new trend. So first things first, guys, this one inside of our last bull market, or I should say our first bull market, we never really ended up seeing a very big move. We didn't even hit the 236. We ended up stopping in between both of these. And so as it stands right now, if this is going to be the scenario that would end up playing out, we would be looking at a move basically up to our range highs at 24,500, and then we would be expecting to see a pullback back onto this major support. And we would be looking at reclaiming our support level that we held right before the FTX collapse, right? And so this is the first potential that I was watching for. This would be the most obvious scenario where everybody that missed out on getting in at this low point of our capitulation would have an amazing opportunity of actually scaling in as we reaccumulate back onto this support. Here's the thing, guys, I don't know if we're going to get such a perfect example for everybody to get back in because the markets really don't work like that. Generally, what the market is going to do is what everybody least expects. And from that, kind of what I would imagine is that it would be a bigger breakout to the upside. I would absolutely love this potential where we only rally up to 24K and then we pull back onto this previous support level that we held throughout, 4 to 5 months throughout this period. It would literally give everybody such an amazing opportunity to get back into positions and reaccumulate new positions in all of the above, waiting for the next move back to the upside. This is what I would love to see. Honestly, this would be the most ideal scenario because it would leave the least amount of people behind. But in the same rule of thumb, if we do see this type of a move, we rally up to 24K and then we start pulling back, I can almost guarantee there's going to be a significant amount of people that are just going to automatically assume that the bear market is still intact and we're just going to see another massive drop to the downside. No matter what, very few people are willing to accumulate into the new bull trend. And if we get an obvious setup like this where we reclaim this previous support and it just ends up being a massive support and resistance flip, I can almost guarantee that there's going to be a ton of people that are still unwilling to buy even in such an obvious setup like this. And so this is one potential that we're going to be watching for. Another potential, if we come over here and grab our 2016 bull market, this is one that, in my opinion, would catch more people off guard, but it would still be relatively the same sort of setup. Now, inside of this move, what we saw for Bitcoin was we actually topped in between the 382 and the 236. So this would be looking at a move upwards of about 32,000, relatively close to this 30K support floor, which is kind of what I've been coaching you guys about. I've been saying that, in prior bear markets, once the new beginning bull trend starts, the way the markets have worked in years past is we revert back to the mean, which if we look at the mean area of this trend, from analyzing the top of the cycle high to the bottom of the cycle low, I would basically say that our mean is pretty much 30 to 35K. Pretty much the 382. That's where I would view our mean area of the total bear market, right? And so if this is the case, I would expect to see a rally upwards of this $30,000 to $32,000 level, could even peak upwards of 35,000, and then we would ultimately be flipping pretty much the same as our first cycle that I just shared with you, except instead of us coming all the way back down to retest this green box and doing something like this, we would basically be retesting the move before the FTX collapse, right? It would be up a little bit higher. We wouldn't come all the way back down to retest around 20K. We would be holding support above about 20 to 21,000. And so if that's the case, you know, it doesn't really change a whole lot. Nonetheless, both of these scenarios gave everybody another opportunity of being able to get back in, seeing the obvious support and resistance flip, and being able to basically restructure and rebuy on that dip. Now, this is the next scenario that we would see, and that is pretty much the one where most people would be taken by surprise. And this is kind of what nobody wants to see, because I can almost guarantee you the vast majority of people are significantly underexposed in comparison to all of the other moves. I think a lot of people are expecting that the other two scenarios would play out, where we'd be getting a much more consistent, you know, rebuilding of the previous trend, where we're basically breaking out, making higher highs, retesting previous resistance levels as support, and then slowly kind of continuing on in that trend. That's what everybody expects. That's what everybody wants, because everybody is just basically looking at, you know, the same sort of things. But nonetheless, guys, one of the big things that I want you to really remember here, and the big reason why I was willing to accumulate back down in here at these low points, is because I was somebody who got to experience this big move, right? So in the first cycle, we topped pretty much in between the 0 and the 236. In the second cycle, we topped in between the 236 and the 382. And in the third cycle, we ran all the way up to the 618. And it caught everybody by surprise, because everybody back then was pretty much expecting that we would have some very slow, methodical creation of the new bull trend. It wouldn't be too volatile. It would just be consistent like all of the other prior cycles were. This cycle caught everybody off guard, and we rallied straight up to the 618, leaving almost everybody behind, because we only were given 3 months worth of accumulation after such a massive 50% sell-off. And so most people were still expecting either new lows, or they were expecting to see, you know, a whole year of us just going sideways. Neither of those two scenarios happened, and we ended up just getting a massive move all the way up here to the 618. The reason I draw this is because back then, I was one of those people that only invested a very small amount when we were actually at that $3,200 level. I had more that I could have bought. But I was still too in my head assuming that we would just basically be going sideways for the whole year. That's kind of the way that I was looking at it, and I was proven wrong. And this is what ended up happening shortly after. And so as somebody who experienced that firsthand, as somebody who definitely felt the FOMO throughout this entire period of time, I want to tell you guys that in this moment right now, as we're rallying upwards of our first resistance, we've just had our first major breakout into the new bull trend, you can expect the unexpected, and that's the big important thing I want you guys to remember. Even if we end up kind of making this similar sort of move where we kind of chop around at this level, the resistance right before the FTX collapse, I want you guys to remember that if you don't have exposure of any kind, you feel like there's altcoins out there that you want to have a position in heading into this next cycle, don't hesitate being able to accumulate those right now. Because here's the thing, guys. From my opinion, the way that I'm trading the market, the bottom is in. All dips are buying opportunities. That's the way I'm looking at the market. Based off of all of our prior cycles, we know that we still even have more upside to go if we're even comparing it to the smallest impulse that we saw heading into the new bull trend. And that is basically this circle right here, which would be taking us pretty close to this $24,000 level. That's kind of what I'm watching for. And so if we end up seeing a similar move to what we saw in 2019, a lot of people are going to get left behind, and there's not going to be too many dips to get back into the market. What we're looking at right now is a retest of our resistance right before the FTX collapse. So as of now, it's technically resistance, right? And we could continue to see, you know, a sell-off from this point. I wouldn't be surprised to see a little pullback. I would love to see a little pullback, because that would be a great opportunity to get back into the market. But nonetheless, guys, if we don't end up getting that, are you prepared now for any type of move to come, whether it's this move or whether it's some of the smaller moves? Either way, I think that we should just be prepared for this type of move regardless, because even if the other two scenarios play out, that's great, because we're going to get another opportunity of jumping back in the market. But if we see something like this happen, these are the pullbacks. they're not very big, and these are happening really sudden. And I remember watching this one right here. Almost every single person was drawing this as a massive head and shoulder. They were expecting that we were going to drop because this was already such a massive move off of those lows, and that resulted into another move that pretty much doubled our last two. So you got to expect the unexpected. And that's what I like to tell people as somebody who's been through, this is going into my 3rd cycle, 7th year in crypto. I was somebody who got to experience 2 of those cycles, and in 2019 I was caught off guard based off of how big this move was. And so if we do see something similar, you're going to want to have a little bit of preparation beforehand, just so you can actually ride out this wave if it happens, and you don't have to be somebody that's feeling FOMO the entire time. The people that felt FOMO throughout here were the people that were unwilling to accumulate throughout here and throughout here. And so in that same way of thinking, if we make a much bigger move off of the lows, even if we can ignore this whole blow off top and we see something like this, this is still going to be a massive move, right? This is still going to be a move all the way up to over $30,000. And you know, if we see this actually happen inside of the price action, all of this move down here is going to look like an amazing discount, right? Whereas everybody that accumulated down here and then watched after the FTX collapse, they got really scared, they were really worried about it, and they felt like, oh man, I bought too early, this was a bad time to buy. It wasn't actually a bad time to buy, because when we're fast forwarding towards, you know, the midpoint of this year, towards even the end of 2023, and the market has made a big move off the lows, or we're accumulating around $30,000 or whatever it is, everybody that was unwilling to buy down here is literally going to be upset with themselves that they didn't get exposure. Even after this sell-off, we have to think in terms of the big macro picture. Now that the bottom is in, now that we have confirmation that the bottom is in, now that we've broken all descending resistance, keep in mind guys, look at this. We've already broken out of our descending resistance. The FTX collapse was a retest of prior resistance as support. And so that's why I was willing to buy. There was too many factors telling us that the bottom was in, and we shouldn't be focused too much on the potentiality of one more final capitulation, because most likely this was the final capitulation. And so if we see a big move off the lows, you want to have preparation beforehand. Keep in mind guys, the one final thought before we wrap up this video, I was talking to my cousin, and he was asking me what he should do in the short term. And basically what I told him is, in the short term, you know, the market is up, it's gone up a lot, we are sitting at some short-term resistance, but it doesn't necessarily mean that it's a bad time to buy. And the reason why I said that is because I had this picture in mind. I was somebody who watched that move off of our cycle lows in 2018, beginning of 2019, and I remember this move right here, and it reminds me a lot of what we're seeing today. We went through this 3-month accumulation, and then we got this massive breakout right here. Inside of that breakout, this would have been a good opportunity to buy, but a lot of people refused to buy because they viewed this as us being under resistance. They said, nope, this is a retest of resistance, you don't want to buy this, this is going to dump again. And so a lot of people didn't buy it. And had you have bought this, you know, a lot of people would have said, oh, this is FOMO buying, this is a bad time to buy. But look what the market did after. This was not FOMO buying. And so when I say that same thing, that's what I mean. Even though we have made a decent move off of the lows, we are sitting at resistance. Is it really FOMO buying if we're looking at a 1, 2 to 3 year perspective? If we're looking at a 1 to 3 year window, this is going to go down as a good opportunity to buy. I can almost guarantee that anybody that was willing to buy sub $25,000 is going to look back a few years from now, and they're going to be thankful that they did buy. Even if, you know, the market pulls back, even if that happens, you're better off FOMO buying into a short-term resistance than you are FOMO buying after a massive breakout into the new bull trend, because nobody knows how big that is going to be. Our smallest one that we ever saw is still about 10% away, so we could still see a pretty decent move up to 24,000 before this is even done. Even with a pullback, what we're looking at here is, you know, a pretty small drop in comparison. I don't really care about the potential of a 5 to 10% drop, because here's the thing, guys, what we're looking at is the macro view. We're looking at multiple, you know, 100% gains as we rally back up to the upside. Where we're at today, if we were to go to the all-time high, we're looking at about a 2.5x, 2.2x, and so that's a pretty decent move. I'm not worried so much about the potential of a 9 to 10% drop. when what my focus is how the next big picture cycle is going to play out, which we're most likely looking at, you know, $150,000 to $200,000. That would be about my guess, and we could extend even higher than that. I'm not going to try and sit here and predict price, but when we're looking at, you know, the potential of a small little dip right now as we're at short-term resistance, in my opinion, it does not matter and it should not hold that much weight, considering if you're somebody that wasn't willing to get exposure down there, this is basically just what you have to deal with. The fact that you weren't willing to buy at the range lows means that you're going to have to buy a short-term resistance at some point, because if you aren't willing to buy this short-term resistance and we don't see that dip and we rally all the way up to 30K, you're going to really be upset with yourself that you didn't. And so at the end of the day, it's your own trading plan, it's your own will. I was willing to buy that dip because I understood how much it sucked watching this move happen off of our range lows. And so guys, if you found value in this video, do me a favor by leaving a like, comment, and subscribing. If you guys want to join my Discord server, you want to see which signals that we've been posting, there's been a number of different altcoins that we've bought at the range lows that are performing very well right now. If you guys want to be able to get in, especially when we're seeing these massive breakouts take place inside of our next bull trend, there's going to be a ton of profit to be made. And really, we've got one massive move coming in 2023. And most likely that will be the only real opportunity that people have until next year in 2024. So if you want to be able to capitalize on that, you want to see what I'm personally invested in, which altcoins I think are going to perform the best, links are in the description to go ahead and sign up. It's a one-time fee. It's going to get you lifetime access for as long as I'm posting signals. You know, there's a lot of profitability inside of there, and so I would greatly love to see you guys inside of that trading along the cycle with me. The best time to get in is at the very low. Now that we've just begun the next cycle, this is where you're going to be able to make the majority of this profit, is by getting in at the range lows. And if you want to see where I'm personally putting my money, check it out. Links are in the description. And with that being said, I will catch you in the next one. As always, peace out.